What is happening, everybody? Happy Wednesday. Welcome back to the Daily Profit Plan. Get the screen share up here. All right, a couple of housekeeping messages. Yesterday, had a nice winner on Daily Profit Play. This morning, markets are all opening a little bit softer. We're seeing some big gamma filling up around 69.25, 6,900. My pending order for engineered options could be filling this morning. Let's take a look when we hit opening bell. I'm going to go into the charts here. I'm gonna get logged in. I do want to give a big shout out to all my new engineered option students for this week. Big shout out as well to those that ended up upgrading to engineered options and upgraded into project options edge. And I wanted to say also that we will have our first kickoff class / master class on engineered options Thursday. And because the markets are closed on Monday, I'll do a little slide. I'll push this in Telegram. But on Monday, since we have MLK Day, so Monday is market holiday, so no markets, but we will be live. I'm going to do an engineered options. This is going to be masterclass number 2. And I'm going to do a project options edge. I'm going to call this advanced masterclass because project options edge is a bit more, I'm not going to say it's advanced. I'm just going to say they're maybe combination strategies you haven't used in the past. But I'm just going to put advanced masterclass just because it's not a typical, not just buying calls. It's not just a basic spread where, we're using some capital, we're using some campaign trades. This is more of like investment style trading and portfolio management. Okay. So this will be, deep dive continues because we will get into a deep dive this Thursday on our first masterclass. But, I'm just going to use the holiday time. Markets are closed, but I think it's a great time to, stay with all the students, get everyone up to speed. We're still having more students jump in and join engineered options. The trades are still valid and pending. I think we're going to get filled on engineered options today, just based on what I'm seeing in price action. So that's a good thing. I'm pretty excited about that. So hopefully we will get a fill and get a nice cooperative move where price can stay at least carving out some positives for the week, at least into Friday, which is what we'd be looking for. Okay, I'll figure out the times on Monday. Probably, oh boy, probably like 11 a.m. I mean, the markets are closed. If we do like an 11 a.m. Masterclass, I might just go back to back and teach like a 3 or 4 hour block for those 2 classes. Let me finalize that for Monday. Cool. Okay. So if I have a members Telegram for engineered options. I have a members Telegram for project options edge. Look for those Telegram messages for those master classes on Monday. But we will have a 2 p.m. masterclass Thursday on engineered options, and I will finalize the times for Monday. I'm in Salt Lake City, or just north of Salt Lake City, so I'm 2 hours behind. So I don't want to wake up at 6 in the morning and start a masterclass. So it's going to be, banks are closed, markets are closed. I'd like to sleep in, once a week. So if we did like an 11 a.m. start, that's fine. Usually I don't sleep in much past 7 o'clock, but typically my day starts at like 5:30. So anyway, I'm thinking like 11 a.m. Eastern time would be a good time to start. Maybe we have a little power lunch and just go like, I'll do like a 3 to 4 hour block between the 2 classes. And that'll be a nice way to kind of service Monday for everybody. Cool. All right. When you get a chance, what platform to use on Tasty Trade? I'm using their desktop platform, not the web, Chuck. I prefer the desktop over the web on Tasty. I mean, I have the phone app and stuff. I use the phone app when I need to. Like yesterday, we had a guy coming to up the internet, so now I'm officially wired into our Ethernet. So he rerouted our ports, which is great. But I was on my laptop and on my phone, so if I have to in a pinch, like I'm comfortable with the phone app, obviously, comfortable on like a mobile hotspot. If I need to pull up something, a web app is pretty fast. But I prefer the desktop application for Tasty. And then I also, this is interesting, but I prefer the web application for Thinkorswim. I just go to whatever is most intuitive and easy to use. There's been 2 broker platforms in my entire career that I thought I need to figure out how to use this. The Thinkorswim desktop was one of them, and the Interactive Brokers was the other, just because they don't feel easy. They have like all the tools in one spot. They have different tabs and workspaces that you're trying to find and allocate. It's just a YouTube video helps. Like literally, Interactive Brokers took me 10 minutes to learn, but I wanted to figure out how to build a proper like dashboard. Thinkorswim, their desktop application, same thing. Is like you have your analyze, your trade, your monitor. You've got your education stuff. You can customize it however you want, and you can make it perfect and useful and fast. But it wasn't just turn on a broker platform and instantly feel comfortable with the platform. So if you have that type of platform like a Ninja Trader or a Thinkorswim desktop or an Interactive Brokers, spend 30 minutes watching a couple of YouTube videos on navigating that thing and building out a workspace, and it'll certainly help for execution and management. Okay. I think Thinkorswim feels faster than Tasty Trade. I mean, I disagree. I mean, I think the fills are about the same. Thinkorswim's great. Highest spread was in 0.08 of limit order. Okay. What's the risk reward ratio of engineered options? No, Doug, we're doing 1-to-1, dude. That's why I built the class. I don't want to do 50 cents to risk $2. No, I want to do risk 50 to make 50, or worst case scenario would be like risk 60 to make 40. Or if I was going to do risk 3 to make 2 on an SPX trade. So we'll break all this stuff down in class tomorrow. Okay. So yeah, the risk reward is going to be certainly more favorable, like 80% return on risk or 100% return on risk, right? In our deep dives, I will show you how we can get that 80% return on risk, 100% return on risk. And even when we're ready for it, I want to make sure that everyone is, crawling at the same pace and ready to go. But once we're going into deep dives and more master classes, I will show you how we can also turn that into potentially more reward than risk. Okay. All right. So I am here with the broker platform. Let's do a couple things in the morning. So we're looking at futures opening a little bit softer. Silver hitting all-time highs. If anybody's long silver, awesome. Enjoy the run. I think we're going to have a pullback anytime. I'm not shorting silver, but if you are heavily long, maybe some hedging, maybe some protection, maybe some covered calls wouldn't be a terrible idea. So here's what I did. For my silver trades, I was long for 3 years, and I rode that thing to these all-time highs. That was literally my target. You can go back for 3 years and see that I've been talking about silver being the better trade. I think it's better than gold. I think it's cheaper than gold, blah, blah, blah. And, my return on investment was much better on silver. However, when I took some profit here, that was a 3-year trade. That was very profitable. But we pulled back, and I started to dollar cost average in, expecting I could get maybe a bit more of backfilling here, but that wasn't the case. So I still have a core position in silver. I have CEF running, I have PHYS running, and I have SLV running. But this run to 90+% or whatever the heck this is from this little dip, the market is up 98, almost 99% since that pullback in October. So I am participating, and I've nearly doubled my money, which is fantastic. But I'm doing it at a fraction of the size. So, I think it's fair to say that I'm a little disappointed, but also breaking historical highs and having a trend for the last 3 years doesn't make me feel bad about taking profit. So it makes me feel bad that, oh my gosh, I cannot believe that we're outperforming on silver like we are right now. But I will go back to this measured move. And this is where I think, some chart experience comes into play. And I said this in an earlier session this morning. Look, everyone thinks that silver's this amazing run, and it is. But I can promise you one thing, and I don't say definitive stuff very often when I'm trading. I can promise you one thing. We will have a pullback. I don't know if we're going to hit 150 first before we pull back. I don't know if we're going to fall immediately, but there's not a single chart in the history of charts that goes straight up that doesn't pull back. So I don't want to call the top. I'm not shorting silver, but I'm saying if you are long and levered and you have a lot of profit in silver, it is not a terrible time to say, you know what, this is ridiculously good. This is ridiculously profitable. It would probably be wise to protect some of it. Okay. Because you can always get back in. I think that your risk now is certainly way more to the downside if we start seeing heavy take profit or heavy take profit wave, or we start to see that the gold silver ratio starts to bottom out. Historically, around like 50 or 40 is when gold tends to outperform silver. and we're trading at 50 right now. So my point is, it's had a fantastic run. Don't be freaking greedy. It's like this chart will pull back. I don't know if it's going to go higher first before it does. I don't know if it's going to drop immediately. But from a technical standpoint, going back to the 1980 high, this is the all-time high we had back in 1979, 1980, and then again in 2011. Take this box, copy that box, and the measured move is literally now, and we've hit it. Yes. So from a measured move, I think that it is time for some, symmetry. I think it's time for some take profits. I think it's time for some markets to maybe pause a little bit. Does that mean I want to short silver? No, that's a stupid trade. But I do expect there to be some pullbacks. And the crazy part is, because we've run from this low at 12 all the way to 91, I mean, this could be the fib. You could take a fib from this low to this high, and there's plenty of support, but we could pull back to, 62 silver. We could pull back to 49.50 silver again. I'd still buy it, right? So anyway, I'm just being patient. It's clearly garnered a ton of attention. I saw that silver, I don't know if this number is true or not, $5 trillion in market cap with this surge, right? So anyway, it's been amazing, but it is also extremely crowded at this point. Like, everyone knows about silver. Everyone's talking about silver, and I get it. It's not just a metal. It's industrial. It's strategic. We need it for AI. Silver could go to $1,000 an ounce, and it still doesn't really change the price of this, this race to AI. But a chart that looks like this will bend, and it will break. Every chart has done it. Lumber did it. Coffee did it. Copper's done it, right? Everything that's been parabolic quantum computing, meme stocks, GameStop, they all break. So I promise you, it will bend and it will break, and we'll have some pullbacks. I think it's still a good opportunity to buy some dips, buy some discounts. But I'm just, this is my public service announcement for the day. Do not be greedy with a 90+% run out of the gate. Do not be greedy with year to date. I mean, look at year to date on silver. It's ridiculous. Okay. Silver is already up from last year's candle. We're getting that immediate pop. It's already up 28% for the year. Okay. Now, if you look at a yearly chart, what's funny is every time we've had those huge candles, this would be my last segment on silver. Okay. Huge candles. What does it do? It does go higher, but that typically doesn't end well. Okay. This huge candle, it does go higher, but it typically doesn't end well. This large candle, it does go higher because it is going higher. But if it doesn't end well, I don't think it's going to look good. If you give this, a year or two, we're probably going to have the pullback that we're possibly waiting for. So I'm going to be exercising some patience, and that is the hardest thing to do. Okay. What about setting a call credit spreads? So, Davey, you're telling me you want to call the top. I would say no. Why? Why? I don't know how much crazy juice is behind this trade. Calling the top, you're literally picking up pennies in front of a steamroller. So don't. If anything, it's like, do you want to own silver long term? My answer is yes. So I'm just trying to get some levels I think would be technically better to buy versus just chasing a rocket ship that's going to the moon. Okay. All right. A couple more things. Engineered options. Trades are pending for this week, and based on what we're seeing for the gamma levels this morning, let's go. Futures market should be around 0.4% lower. We did have a close yesterday right at the end. I was a little miffed yesterday watching the market. So we had a great efficiency day. We ended up pulling out a daily profit play. The dollar that I got, we ended up closing for 20 cents or 15 cents. And so a couple things, right? Futures down 0.4%. We're going to open a little bit softer. So 0.4 puts us down to about 69.35. You can see my gamma levels to the downside. We're going to go back into negative gamma. If we close below this low, we maybe come back to retest. My biggest gamma level that I see here is 69.25. That should be enough for us to get filled. Okay. So I'll be watching my trades this morning for engineered options to see if we in fact get our fill. It is Wednesday. We're taking our trade into Tuesday. We should be getting that trade slightly in the money, which is enough to get the credit that I want, hopefully for that 1-to-1. And I will let you know if those get filled this morning. Okay. So if you are not in engineered options, those trades are still valid, and I'm hoping we get filled. My goal is to get filled on level 1, which is right around here. So I guess technically it's my level 0 trade because I'm participating. So there's my level 0 trade. If we get filled here, I want the market to obviously stay above that for the week. I need the market to stay 1 penny above that, and I can get my full return on risk. All right. So if we come back to test this low here, or even test this low here, but the market can still bounce and finish slightly positive for the week. Like this technically right here is the difference between the market being positive and negative for the week, right? Even though this looks like, oh, the market started and went up on Monday, right? But we were down for the week. And even right here, the market was still technically down for the week. Even gapping lower today, the market's going to be down for the week. So my question is, how down are we going to be? Because if we fight around and we try to, maybe hit these levels today, and then Thursday, Friday, we get more flows to the upside, if the market tries to garner a positive week, we'll hopefully get a trade in and then grab a winner by, Friday or Tuesday. Okay. All right. Yeah, but it's finite, Dan. It's like that's great, but ultimately you're gonna have to have something a little bit more sustainable than silver. It is hard to build. It's hard to get. Um, Look, there's an interesting saying for people in the COMEX future space. In the future, gold could be known as unaffordium, and silver can be known as unobtainium, because it's going to be so hard to get it, so hard to mine it, and then the prices of both could just be so astronomical that they're just going to be, higher, higher, higher. Now, also the one thing that is, I'm sure it's on the radar of central banks is, you're seeing bigger investment banks, you're seeing bigger governments that are just doing what to gold and silver? Hoarding them. They're demanding physical delivery of silver, demanding physical delivery of gold. That hasn't happened in a long time, right? Everything's like futures and paper trading. Now it's the real deal. They want physical delivery. J.P. Morgan, Citigroup are like almost fleecing like Deutsche Bank for their bars of silver because they're doing the futures. So it's a real thing. But that doesn't mean that the chart is broken and that's not going to have a pullback. We will have a pullback, right? It is a crazy time. It is absolute mania, but it is extremely crowded and the chart is parabolic and broken. So it's going to have to come back to have some sense of normalcy. It will. And I hope to be there kind of waiting to, buy some discounts. All right. What I hear you say, someone other source said this is an attack on the Bank of China for a short position. I mean, I don't know. If somebody is short on silver, they're morons. I don't care if that's a bank. I don't care if that's. I mean, I don't know. I feel like they'd be hedged. No, like institution should be short. Everything that I've read is net long, right? China attacking JPM or some other bank. Well, JPM's net long. I mean, they're demanding physical delivery. They were like fleecing Deutsche Bank over the last like 30 to 45 days. So we'll see. Anyway, let's see what happens for this morning. Look, futures down 0.44%. That would be roughly an open here around opening up around 69.32. Okay. Let's see if we get some fills this morning. I'm going to check and see before we get into the markets here, plus minus SPX. We are going to have some higher volatility. The VIX is up to 17. So today's plus or minus is 32.92. Let's write that down. So we have Wednesday, 32.92 pre-market. The VIX right now is reading over 17. I've got a 17.2 VIX. I'm going to set a chart alarm at 18.19 just to see if this thing starts to rally again for the day. That would give us a little bit wider swings. Okay, so everyone in daily profit play, I've taught us well. We have to make sure that we are, taking our daily profit play. I'll probably go 5 wide today. We might be able to pull in some decent credit going lower deltas, but remember that if the VIX continues to go higher, I don't want to just immediately call defense at my daily profit play levels. I want to go to my VIX levels. So I mean, we might just be in for some interesting like volatility like today and this week, or like we've seen in the past. We've seen the market get up here towards 17, 18 VIX, and then it just retreats. So it could be the same type of thing as just a little volatility flare up. I do want to check on one thing this morning. Do we have a volatility expiration today? Do we have a VIX expiration for January? Let's see, VIX expiration. So we got December 18th. Let's see. So the 21st. So that's next week. All right. I know the reason I was wondering is because typically when we get a run up in volatility going into that VIX expiration, it tends to be the run up in volatility tends to decrease and deflate right after that VIX expiration. Okay. So I'm curious what that puts us into price, because if the VIX is going up into its expiration and then it deflates, that typically helps form some short term bottoms in the market. Okay, so we'll see what this looks like timing wise. So the 21st is a VIX expiration, which is right after this Friday's monthly expiration. David says filled $1.60 at 10:31, closed about 2 minutes later for what, dude? Live account, David? I mean, you must have got a fantastic fill. And where'd you got? You got filled at 10:31 a.m. Wow. 10:31. Well, there's your 10:25. I mean, there's 10:25, 10:30 a.m. So if you got fill, I mean, you must have had like one of the top fills going how wide? If you got a $1.60, did you go 10 wide? I mean, either way, dude, that's great, because what would have happened is, let's say that would have been like one of the higher offerings of your credit. As soon as the market bottomed like that and jumps up, 20 points or so, or 15, 20 points, yeah, you're going to see that aggressive like zero DT, credit fills, and then price goes right back to neutral where you need it. And yeah, that's good, man. I mean, that's awesome. Ernesto says got filled a $1.50, 10 wide. Okay, good. Yeah, type in everyone in the chat. Final hour. Yeah, Mike, you asked me that. Put that on Discord. I sent you a message. I am doing it. It's launch week. We're busy. I've got, I mean, I'm doing like 20 webinars this week. So yeah, I mean, YouTube, if I'm doing webinars, and I got other live sessions, and we had a doctor's appointment yesterday for our, baby that's coming in April. Life is a little busy at the moment, but I'll get there. I'll post some videos. I'll get some content out. I'm also working with the team. I'm going to start like kind of specializing my YouTube channel a little bit more. I've been doing it now for going on 3 years of just like, it's a labor of love, it's trust content, but there's a way to turn YouTube a bit more into an asset. So if I'm going to put the time into it, I want to make sure it's going to be, kind of optimized. So I'm working with Prosperity Pub on doing something like that. So we'll figure it out. Yep. So yeah, at the very least, if I can't do like live like I typically do every day for final hour, it's like I'll still get a video or two out every week. That's still the goal. So all right. Anyway, let's focus on the task at hand. So expect some volatility today. Again, you can see these gamma levels are quite wide. We are going to gap lower. Pressure comes into the 30 and 25. That should get us filled on engineered options. We have, this was by design. I have levels right in here and right in here for us this week. We will see how those play out. Obviously, I'm looking to see left on the chart if the market can, find this support, find even this support. This is where the market would be positive for the week. Okay, but this is where the market would be break even for the week. So my goal on engineered options is can the market carve out a break even, and we can make money, right? If the market is down slightly, if I lose one, win one, my goal is not to lose even though the market is down. That's engineered options. How do you tell it's going to be gap in lower futures market? So if you take a look at ES1, that's the futures feed, we're down 0.45%. That's going to translate almost exact percentages to the SPX. So we will be gapping lower by about 0.45%, which puts us around 69.32. Okay. Bill says, where can I get into daily profit play? You can just contact the team. Daily profit play, we can do this every single day. You can just reach out to support@prosperitypub.com or give our team a call, get slotted for daily profit play, get in the members alerts, Telegram, stuff like that. Okay. All right. So daily profit play, we got opening bell here in a couple of minutes. VIX at 17.2. I do want to keep an eye on this. I've got a VIX chart alarm set at 18, 17.2. We're looking at potentially a move today about 1.08%. Okay. Now that's again like the VIX high, the VIX low, kind of the extreme. If the VIX continues to go up for the day, that number is going to change. That number is going to get slightly bigger. All right. I think a lot of this too is, I don't know if this is Supreme Court noise, Supreme Court news that's supposedly coming out at 10 o'clock today. It's not on the calendar. Last Friday we had a lot of what we thought was going to be volatility. It turned out to be a big nothing burger on Friday, right? So I think the Supreme Court is at least dropping some comments or maybe even making that official ruling on tariffs today. Okay, so I will likely stick to a pretty small delta there, Vladi. Yeah. Yep. I don't, and again, we don't know what it is. If it's good, bad, if it's noise, I don't know. So if you're worried about it today, then don't trade it. Seriously, like but we have done this many, many times where we've talked ourselves out of a non-farm payroll trade. We talked ourselves out of a CPI trade. We talked ourselves out of a Trump's on the calendar. Don't overthink it. This is the market efficiency, right? You've got to believe like market makers know this stuff is happening. So look at the jump in volatility for the day. We just jumped up to 40 on the day. I saw plus minus 45 because of that VIX night. Now it's at 31. So anyway, pre-market was 32.92. Now we're sub 30. Okay. All right, let me see here. So we're trading at 93. If we get pressure to the downside a little bit, I'm looking at this position to fill. We got to be close. This one's trading around 44. Yeah, we got to be close on level 0 now for my XSP. I'm seeing a 45 cents. Let's see if I can sneak. So what's 40? I mean, if I go 45 out of 50, I mean, I'm getting a 90% return. I think we still have some pressure to the downside. Look, I don't need to chase. It's like 1-to-1 is great. 1-to-1 is simple. We do need price to drop a little bit lower though. So if we are going to, I mean, don't freaking jump up on that gap, you a-hole. Gamma levels are still pressured to the downside. That's my daily profit play. Here's my gamma. All right. If we hit 30 or 25, we should be getting filled on our XSP. That's my trade for this week. Okay, let's keep an eye on the VIX. 17.2 VIX, crossing 69.35. The chart alarm's going off. All right, good. A little bit of pressure to the downside. Come on, XSP. All right, let me see here. So this is the 20th. 94.93. Let me see if this will fill at 45 cents. Okay, will this fill at 45? I'm just going to make an adjustment here. If it fills at 45, then I'll just say that's my level 0. I want 50. I think we push a little bit lower, we get filled at 50. But let me see if 45 will fill. I mean, I'm seeing the mid price at 48 right now, so it's going to be close. Right now we're trading, we're in the money by $1.20. All right, let me modify this to, I'm going to go 45 cents. Come on, you freaking turd. All right, I'm going to leave that at 45. Actually, you know what? Let's just go to 50. I don't want to make this confusing. I'm going to go 50 cents. We got a master class coming. I don't need to like jump around and confuse anybody when we have class tomorrow. Just keep it the same at 50 cents. That's the plan. All right, but we are going lower. That's a good thing. Okay, now let's take a look at daily profit play. So if we get filled on engineered options, I will blast the Telegram channel for members and say, look, this is trade, level 0, level 1. They're all getting filled. That's good. Okay. Let's see if we can get that bad boy filled. Let me take a quick peek here. So initially the market started around 35. Let me look at SPX really quickly, since it's just a tiny bit more liquid than XSP. If I did 35 by 40, let's see here. If I go 40, 35, 25, I'm trying to play with some numbers here. $35 by 30. Can I get $2 for that? That basically means if we have a break-even week, there we go. Let's try to get like 2. Did we hit 25 today? I'm gonna try to get $2 in this thing. Or I could flip it around, get a break even there. All right. Gonna let that grind. You've got to be fucking kidding me. All right. Clearly, I found support for the market for the week. I just want a dadgum fill, huh? All right. Come back and retest 25. Set a chart alarm. All right. Let's take a look at some daily profit play. We have some drama today. VIX is starting to retreat a little bit. Highs at 1737. 1085 for my top and bottom. Okay. 1085. So we're going to take a. And again, this Supreme Court stuff, who knows? It could be a very noisy day. Just be patient, and also no need to get crazy on your trade size. So we gapped lower. If we're going 1.09, it's about a 68.57 low. VIX at 17.37. I believe that was a recent top here. Okay, so we do not want to see the VIX go higher. If I'm going to safely call this bottom at 68, I think it was 57. Do that again. So from the open, 1.09. So take the open. So 68.57. Oh, I did the wrong one. Let's go to this workspace. $68.57. That's outside of my VIX box. Okay. Keep an eye on that. And then to the upside, if we have upside risk, again, I don't know. We've seen upside risk a lot in 2025. This was the gap from yesterday. And then go up 1.09. That's a 70-40. Okay. So I have a trade filled. I'm going to put in a trade for engineered options. Again, you do not have to take this trade with me. I'm going to take this trade. I just got filled. Engineered options. New trade. Optional. SPX. 120 expiration. 69.35. 69.30. Okay. So what I'm looking for is to see if the market will, use this structure here to bounce back up. If price is above 69.20, I'm sorry, 69.32.50 or 69.32, then I carve out my profit. I do think that 69.25, 6900 could be tested. That's really what I thought the plan was on Monday. We just had no additional pressure to the downside. Okay. So could be just a noisy week. We'll see what happens. Yep. But I'm going to keep XSP the same. I don't want to modify those trades. If they get filled, they're fine. They're 1-to-1. But I'm sprinkling in SPX. I'm willing to take that 80% credit. Again, we'll talk about all the stuff in engineered options class tomorrow. Okay. All right. Let's have a look here. With some pending volatility on the day, let's go to today's expiration. We're still at like a plus or minus 33 and change. I'm going to go a pretty low delta just because we do have some drama today. So if I did let's see here. 85, 90. What's this get filled for? 15 cents. So the broke wing butterfly is going to be offering way less credit. So I think I'm still better off just doing the credit spreads. Any gamma up here that I need to worry about? So 80, 85. I mean, part of me just wants to allow markets to have direction. It could be nothing, but like remember, we had inefficiency Monday, efficiency yesterday, and then we're dealing with some potential noise today. I think the smart play is to get our put side below 6,900 and get our call side above like 6,990 to 7,000. I don't know if this is going to fill today, but where did I call my top and bottom at? 57. Gosh, that's so low. Yeah, I did it for $2 there, Greg. So I'm accepting 80 cents on the dollar. Like 80% is my max profit there versus the 100. But I'm trying to go for 1-to-1 on all my XSP trades. It was filled at yep, you're right. So it's 69.33 is my break even. Yep. Okay. So daily profit play. We're pretty neutral today. I know we have some news and Supreme Court stuff coming out at 10. Let's look at the. I'm gonna go 85.90 and 60.55. And see if this will fill for $1 for daily profit play. Okay, so daily profit play alerts coming in right now. So 114 expiration. Okay, pending order. Nice admin. So daily profit play, the trade is posted for daily profit play members. I went pretty low delta. I'm going 9-10 delta on those. Okay, I'm going to give the market a little bit of fluctuation, trading for 80 cents. If we have another push or follow through to the downside, especially to the downside, this could very much fill. Okay, so what's kind of nice is I'm choosing the 68.60. I'm calling a VIX low of the day. Now, VIX is obviously elevating just a tiny bit, right? Chart alarm set. Like, I'll make that adjustment. If I want to play defense for daily profit play, then I will calculate out the VIX is going higher. So going from a 17.37 to a 17.4 does not change my VIX bottom. But if we go to 17.9 or 18, that's going to change my VIX bottom call a little bit. Okay. Let me get this back to the 1 hour chart, by the way. All right. And very quickly for engineered options, just wanted to point this out. We're still stacked up 2-star bullish on the 4 hour, 2-star bullish on the daily. I'm getting just a tiny smidge of indecision on the 1 hour. We're in between. Now that doesn't deter me from taking the trade. Like I still want to take the trade. I think we got some strong levels. I still bank on this, and this is all talked about in the masterclass tomorrow. I still bank on the market trying to find a break even week or better. Right. So, and there will be a time where we will be more aggressive. There will be a time that will be more conservative, but we're just getting a little bit of indecision on the 1 hour time frame because it's below my 50 period moving average. So as long as we can hold between this 50 and 100, 50 and 144, that's indecision, but it's not necessarily breaking trend. And then the 4 hour chart, if we bounce off the 50, that's support. On the daily, we have a lot more room to get back to that 50 period. So look, I'm just throwing it out there. Just expect this to happen. The market's going to find a way, probably in the next 30 days, to either test this 50-day again and bounce back up, or maybe even flush a little bit uglier. And we will make sure that we're not like stuck on the wrong side of that trade. Okay. It's in your Telegram. Engineered options trades in the Telegram. Daily profit play trades in Telegram. If you remember, you've got it. Mark, yes. It's a bull put spread. Okay. All right. Let's see what happens. So now my daily profit is trading for about 80 cents right now. If I wanted to go, let me see if I can go 10 wide in this thing. I don't mind the level, 60 and 50. And if I did 85 and 95, I mean, this isn't awful. Let's see if I can get over $1 here if I go one strike lower. $1.30. Let's see. I'm just going to keep it 5 wide. I really want to go 10 wide just to get a couple bucks, but it's like if we've got some drama with the Supreme Court stuff, I'm just going to go 5 wide, see if we get filled. So I'll just show some discipline. Yep, earnings this morning. VIX climbing. I know all this stuff's happening. So VIX is climbing. Yes. We do have some bank earnings. Yes. Wells Fargo reported. I saw they were down before the market opened. Wells Fargo on a daily time frame looks like they. I mean, officially didn't pop up here that they reported, but they should be reporting. They are down pre-market. Maybe some drag from JPM yesterday. JPM missed earnings, which is typically a surprise. I don't mind like bigger picture JPM. In fact, let me see if I can go JPM here. $200. This might be a project options edge trade. That is a $200 trade. I'm going to take a look at that one this morning. Deere and Progressive. I have some project options edge trades expiring for profit this week. Wells Fargo 59. Again, credit on that one might be a little bit weaker. BAC earnings reported and it was positive, still down a little bit. This low is 34. Okay, I'm going to take a look at a couple of trades. Riz, the engineered option is out to Tuesday the 20th. That's my weekly trade. I have monthly trades that we'll talk about tomorrow in class. Okay, I have monthly trades that will they're still good. Susan says I have 0 day trades left. Is it okay if I do the engineered options? It's not a day trade, Susan. If you get into engineered options, it's not a day trade. That trade is going to be out to Tuesday. We have several days on the trade, and even the expiration is next week. Jeff says, can anyone understand? No, I mean, members can attend. I mean, if you want to attend a free session, that's what this is. This daily profit plan is something I run for everybody. And obviously, I touch on a lot of services. But this is a masterclass for members. On Monday, we're going to do a second class for engineering options, and we'll also sprinkle in a masterclass for Project Options Edge. Okay. All right. So a couple things for some housekeeping. All right. Levels. And I'm going to add in okay. So I updated the tracker for engineered options. Trade number. Let me make this easier. I'm going to put a trade tab in here. So let's start at the bottom. 1, 2, 3, and just drag this up. Okay, so trade number 14 on the tracker. And I'll fill it in from the top. So if you're looking at engineered options, right here on the trade tracker, I just updated this. So the trade I took today is trade number 14, SPX. These are still pending and valid. 1, 2, 3, these are pending for this week. I still want those to get filled and get some participation for the week. But this one I'm taking in. This is where I really want to kind of start. This is accepting 80% of the max credit versus 100%. So this is kind of like, I want to get a chunk in here and see if the market can kind of hold where it started for the week. Can it hold 69.30, 69.35? Can we get back to try to claw back to a positive week? Hopefully that's the case. So these are pending, pending, pending. Let's see if we get filled and get some action. But trade is in, and let me highlight that there. There we go. All right. No water. What's WF? WFC. Oh, yeah, they've got earnings. So I do want to take a look at all of these though. So this is for Project Options Edge. I'm still going to wait and see if daily profit will get filled. So if we press a little bit lower today, that's totally fine. Let's see if we get either one, a participation trade on engineered options. Two, if we push down a little bit lower into the 6,900 gamma, hopefully that's enough volatility to get our daily profit play filled. Okay. And, I'm looking at the 60 by 55, which is, kind of down near the VIX extreme. We shouldn't see price going too much lower than 90. Remember, the day opened right here. Let's use out remember we had a 33, even though the VIX is going slightly higher. Let's see what the VIX is measuring right now for a market maker move. I've got roughly 35 points. Okay. And I know a lot of this is fast stuff when it comes to day trading and zero DTE. So just bear with me here. But I'm going to look at just doing a quick measurement. So if we go 35 points from the open, this candle opens at 69.33. So 6933 minus 35, 68.98. If the market makers maintain an efficient day, we shouldn't be going lower than 68.98. Okay. And with the open here at 30.33, if we go 69.33 plus 35, we're looking at 69.68. So market maker efficiency should be in here. Okay. Market maker efficiency should be greater than this black line, lower than this black line. Now, my daily profit play, I'm usually going higher than this and lower than this. Okay. So now let's change this to a 60, which is where I have my pending order. So 60 here. That will be blue. And my daily profit play is 69.85. So way up here. 69.85 there. Okay. So market efficiency is in between this. My daily profit play is below this blue line and above this blue line. All right. So we have a bit more forgiveness in my trade, and that's by design. I want to make sure we get a little bit more buffer than if the market's going to test the expected moves, right? Most of the time it finishes inside this high and low for the day, but sometimes the market will shoot past it and then close in it. Sometimes it shoots past it, closes in it. We just need to be ready for that. Make sense? Greg, good. Okay, thanks for posting that link, Blake. Are we closing our position? No, Chuck, we just took a position. We're literally in trade number one. Theory said you're not able to trade them on Schwab. Yes, you are. Just type in $XSP or type in $SPX. They're on Schwab. Just type in the symbol correctly. Schwab has $SPX or $XSP. You'll find them. Okay. All right. Where's our daily profit layout for right now? We're trading at about 75 cents. All right. VIX 17. I mean, VIX is going up a little bit. We had this recent VIX run to, 17.8, 18. Let's see what an 18 VIX is, by the way. So about a 1.12% move. The only thing I need to be careful of is that if the VIX is going to do this, I can't call the bottom. Okay. But if the VIX comes right to 18 or so and then starts to stall for the day, then I can kind of call that bottom and try to get a couple of trades into some volatility. All right. So pending orders there. I'm going to wait and see if daily profit play fills. We have one current order in for engineered options. I've got 3 pending for XSP. Those are still valid. I'm still going to hold those trades. If they get updated, they get filled, I'll throw in Telegram. What I want to do right now is take a quick peek at some of these. I want to look at John Deere, JPM, WFC, and BAC. Okay, John Deere trading up to 507. This level, kind of more interested in like this one's pretty pricey, but I think Deere is a bit better than Caterpillar. I'm going to see if I can get like a 300 on this one. See if this is worthy of my capital. John Deere. This would be the 2022 low. This would be our Liberation Day lows. This is 2024 lows. Liberation Day lows here at 406. To be safe, I mean, it's a pretty expensive stock, but even 300 bucks, can I get some premium for it? It's very possible. Let's go to end of the year or even into January 2027. If I go down here towards let's go 300 bucks. Of course, I was going to say this credit drops a ton. Let's see. 310, 300. I'm definitely going to take this trade. So the bid ask is a little wide, but let's see if we can get filled on. I'm going to try to do a ratio spread here for John Deere. Ticker is DE. We're trading at 507. If you don't want to do a spread like this, I would do 300 by maybe a 250. Okay, so you could do this with the fine risk, and it's going to tie up about $3,100 or so, but you can get over 200 bucks income on the trade. That's not bad. I mean, you're getting just under 10% return on buy power. Okay, I like John Deere better. When Lance and I talked about it yesterday, discounted cash flow wise and fundamentally, I like John Deere better. So I'm choosing John Deere. It's also a little bit cheaper. Yep. Let me see. So I'll offer this up for Project Options Edge. If you want to take less buying power, then I would put a spread on this thing. I don't mind that. So that'd be, I guess if I'm going, 90 wide plus the ratio spread, that's a little bit pricey for like an IRA account. Let's see if we can tighten this up a little bit. That's not bad. It takes up about $3,700. Probability of profits 97%. I like the trade. I'm going to take away this leg, and I'm just going to try to get as much credit out of this as I can. So let me see if this will fill. I'm going to do a 310 by 300 ratio spread. I'll try to get 380 credit for it. Let's see if this will work on my margin accounts. And I'll see where I can just kind of penny this thing down for maybe 5 cents at a time and see if it'll take. Obviously, I'd love to get over like 350 for this thing. 375 not filling. 370. Now all of a sudden I'm seeing the prices go way down. 365. All right, maybe I have to temper my expectations and maybe it's going to be over $3 for it. It's still $3 is a decent income. But 55. All right, if I get down to 350, I'm going to go every 10 cents. See if I can get this thing filled a little bit faster. All right, so 340. $330. So as long as I can take $3 out of this, I'm taking the trade. $3, $320. Filled at 320. All right, that trade's in. This trade is going to all my margin accounts. I'll post this for Project Options Edge. Oh, you dirty dog. Hopefully this will fill at 315. You got to be kidding me, dude. I think I just got a really lucky fill then if it's not going to let me fill on these other accounts. What the heck? That's way off. All right, 305. Wow. So I got filled on 2 of those accounts, which is a great trade. Now the bid is all the way down to, or the mid price is down to like below $2. So I'll keep it at 305. I'll get this in for all my other accounts. I'm just going to go pending on some of these. All right. So margin 1608. Let's go 1608. Yep. Well, what the heck, dude? I got filled at 305 in this one. Come on, broker. There we go. XSP got filled. Ah! My engineered option trade got filled. Good. All right, we're in. All right, we got some action this week in engineered options. Let me update Telegram. Eureka. Okay. E engineered options update. Trade 11 XSP, the 694, 693. Okay. Yep. It filled. So all we need price to do is get back above 69350, 693.50. That's our break even for that position. If the market is going to be literally break even for the week or better, we're going to have a winning trade on that position. Okay. The market could finish red for the week, and that's it. But there's also, there's other levels on XSP that I'm trying to play defense on. Cool. All right. Couple more positions here. I'll get this out for Project Options Edge here in just a moment. Just bear with me. So if you can see my screen, I'm doing a 310 by 300 ratio spread. I want to explain that trade because if you're a cash account, IRA account, you're going to have some cash to take that position. If you have a margin account, it's going to take about $3,500 in margin. Okay. So that will go to this account here. 6436. Okay, I'm getting filled at 305. I don't know why the heck these other ones can't fill. Let's try a 304 here. So weird, dude. All right, I'm getting filled at 305. I'll let those marinate. So this one filled. Okay, that one's pending. That one filled. Unbelievable. It's crazy how I'm literally putting in the same trade and they're all margin accounts and some get filled, some don't. But it'll get filled. I'm sure they'll all fill today at some point. Okay, so that one's pending. That one filled. All right, I'm gonna let that hang out at 305. So John Deere, Project Options Edge, coming into your Telegram now. This will be trade number. Let me see here. Can I flip these? There. Let me see. Let me see if I can sort this maybe. I'll do that later. All right, I'm just going to go all the way down on the spreadsheet on Project Options Edge. This is going to be trade number 87. Hold in 305 credit. All right, so this is what the trade looks like. I am going all the way down here to the 300 lows. So 300 by 310 by 300. So my risk is officially at the 287 zone. Okay, oops, that's the wrong direction. So I have no risk on this trade despite it being a naked put, there is risk if price falls. Yes, I like the options market treats it like it's risk. But as far as this trade settling, 287 is going to be where price has to be for me to take on any assignment. So there's no upside risk on this trade. Okay. But what I'm going to do here is if I take ownership at 287, I'm going to flip this thing for repair. And we're talking a stock that would be down about 45% on a stock that has a discounted cash flow to like 650. So we should just see upward trajectory, and this strong trend has been pretty solid. I don't think this market's really coming down. If it's sideways, that's fine. We survive this trade, no problem. Okay. So the way that I would manage this trade, this little like intro slash sneak peek at Project Options Edge. If anybody is in my engineered options, you have an opportunity to upgrade into Project Options Edge. If anybody's in, any of my services and you've been in Project Options Edge, it was an offer last year that we went 61 winners out of 63 trades. So, it's a discretionary service, but I take trades like this where it's like, they're good setups, they're good, strong fundamental stocks, and I typically position for income. Okay. A ratio spread's kind of one of my favorite strategies. It's kind of like taking a naked put, but you give yourself a buffer and it lowers your delta. All these things are good to make sure that you don't take a ton of undefined risk on the trade. But also every time I take a ratio spread, I'm also willing to say, I would own that stock. I would own that stock to repair it. Typically, I don't want to own it long term, but I would own it to repair it. And that'd be the same situation here. Okay. So here's exactly how this trade would work. So I did let's go. So DE, I'm going out to 115.27. So I'm going out a year. It's an income trade. I'm buying the 310 and I'm selling the 300. Okay. And I pulled in 305 credit. So that trade's worth $300. And here's how the trade's going to work. My break even. Okay. So if DE is greater than 310, right now it's trading at 508. So there's plenty of upside there and no upside risk. If greater than 310 by expiration, we keep the full 305. If DE is 310 to 300 by expiration, that is a profit trap and potentially worth $10 plus the 305. If DE is less than 300 by expiration, I'm willing to own 100 shares. Okay, so my break even would be 300 minus 10 minus $3.05. So my break even is going to be 286.95. Make sure I do that math right. 300 minus 10 minus 305, 286.95. So my goal on that would be I would own the shares 40% lower than what they currently are trading at, and I would just add a covered call and flip it for like $500 to $1,000. Okay. Do I think that John Deere is going to drop 40%? No, I don't. Not in the next year. All right. So to me, this is, having the capital to take this trade. The max risk, the options market looks at this like max risk. If the stock goes to 286.95 all the way down to zero, that would technically be your max risk. So 28,695. If you own the shares and they go to zero, that is your max risk, according to the broker. Okay. However, there's another way to manage this trade. If you don't want to own the shares, then what you do is you look at the put. The put's trading for 114. Okay. If this put at $1.14, which unbelievable. I don't know. It's got to be trading for better than that. Let me see what the put filled for. Hang on a second. Let's go this account here. I'm going to tell you what my put filled for on John Deere. So this will be project. So Project Options Edge, ratio spread. So my 300 put filled for 390. Okay, so I'll tell you what else we can do to manage this trade. So the 300 put filled at 390 credit. Consider a stop loss at, that way you can just strictly manage the trade based on the credit. So 390, that's a 100% stop loss. That's a 200% stop loss. So if the stop loss is at 1170, okay, 1170, or take it one more level, 1560. What's my max risk here? You're going to lose about $860 right here, and you'd lose about $1,255 here. So rather than risking $28,000, which would be what the broker says, well, if he has the ownership here, he's on the hook for this thing going to zero. Well, obviously that's not the case, right? If you want to manage the stop loss side of just the put credit, then manage it based on like a 200 to 300% stop loss. This would be a 200% stop loss on the put. This would be a 300% stop loss on the put. So you'd lose about $860, or you lose about $1,255. That is much more manageable than taking on the shares, owning the shares, taking up all that capital, and then trying to repair the trade. Does that make sense? All right. 115. Yeah, it's 115, 2027. Check your option trade. Check your go to all strikes. Try to expand the option chain so you can go out to 2027 for that January expiration. If that's what you're asking, Carson, for DE, are you asking about that one? XSP, yeah, it's in Telegram, it's in your tracker, Susan. That engineered option trade is out to the 20th, correct? Liz, we don't have to put an exit order. The goal is let's see if price can get above that 694 so we can take the full credit. Engineered option says did not fill on Fidelity. I mean, it should be filling. What's our daily profit play sitting at, by the way? $0.65 right now. Oh, never mind. We just got a bounce here off of 02. So my question, I mean, it's 10-12. Did anything happen with what happened to the Supreme Court stuff? Anything? Back-to-back losses, uninspired run economic data, batch of profits from big banks, political risks, blah, blah, blah. Recent one depreciation, not in line with fundamentals. Inventories, we had PPI today, existing home sales. Interesting. I mean, I don't see anything on the Supreme Court right now. Fed speaker, so Paulson speaking today. Yeah, I see nothing on SCOTUS. Yep. Volatility, big drop there. Absolutely. So we peaked right around 18. My alarm didn't go off, so it must have been right at that like 17.9 handle. So I'm showing 17.99 on the VIX, and that's just a huge drop. Okay. Well, I'll be dipped. All right. Well, it is what it is. I mean, daily profit play, I'm just looking to get filled. Maybe the market stays within the efficiency levels, but I'm trying to get my blue lines. That was a good like 9-10 delta. That's a good mechanical trade. It's delta neutral. See if that carves out a winner for the day. Does the market have the ability to get up and fill the gap, kind of like we did on Monday? Market gap lower, filled the gap, right? Brett says in and out standard daily profit play 10 wide. OKTA, we just hit a profit target there. Nice. OKTA for 360. That should be a pinch option. Pinch point scanner, OKTA. Hooray! Another winner today. Love it when a plan comes together. OKTA, that's trade number 62. 240 for a 360 was pulled $120 out of that thing. Don't mind if I do. Uh, 3.60, grabbing the winner. $50 winner. Closed filled pinch point scanner. Shout out to my pinch point scanner members. Trade management. Typing this in Telegram right now. That's trade number 62. OKTA. Profit target hit. Entry 240 debit. Close 360 credit. Broker filled for auto close today. Boom. Good stuff. Supreme Court may decide on tariffs today. Maybe not, says Donna. All right, Brett. Good stuff on that daily profit play. Vivek said did it 69.20, 10 wide. You did the iron fly. Okay, good stuff. 935 out of 850. Love it. John Deere credit near 9. Yeah, it's not going to fill at 9, Merrick. I would just, I got filled for, I was trading for like 350. I think I went from like 370 to 350, 320. I got filled at 305. So I'm letting it sit at 305. 68.90, 68.85, 60 cents net 40, or $1 credit, 60 cents. Gotcha, Jason. You just did a bull put spread. It's pretty good, man. It says it will not issue decision today. Jesus, it's so stupid. Let's just then don't fucking talk about it. If it's not going to happen, it's like, don't make everyone think that the Supreme Court is going to make this big decision today. It's like, markets care. So either decide after markets and we can deal with it, or don't freaking put it on the calendar and say it's going to happen when it's not. That's 2 days. So we balked on it Friday. We're doing it again today. Stop. Like, it's just so much freaking noise. Like, do it over the weekend. Do it after market hours. Like, this shit's so annoying. Anyway, that's why the VIX was up today. It's like we probably had a VIX running based on Supreme Court. Markets were softer a little bit with futures heading lower, but whatever. Go find another trade. All right, DE is in. It's in for Project Options Edge. Let me post it in the Project Options Edge. Okay, new trade. So DE. All right, post this one for Project Options Edge. DE is going to be number 87, trade 87. DE, 115 of 27 expiration. Buy the 310 put. Sell the 300 put. 305 credit. Filled. Okay, so I'm just going to take this portion here because this will just go into my... So go into the tracker or Telegram. All right, DE, good. Trades in. There's a hyperlink for TradingView if you want that. So all I need price to do on DE is to stay above 286, 287, and we've got profit. So obviously, if we're heading higher on John Deere, there is no risk to the upside. Okay. Now I want to do the same thing on PGR, which has been getting its butt kicked lately, which I kind of love. I'm going to do the same thing down here towards like the 111 handle. That's way out there, but let's find out. I have a trade expiring on PGR this week. This is a Project Options Edge that will be closing for full profit. Let's go PGR here. PGR. We pulled in $2.10. And what's silly is, so this is trading at 207.84. This expires in 2 days on Friday. How many of you are in this trade with me? If you have Project Options Edge, you've been in this trade. This thing's been open for 216 days. It's funny because we're only seeing $131 out of the max 210. Now, the beautiful thing is that I have a $500 profit trap in here that if we end up pushing a little bit lower, let me set a chart alarm on PGR. If we go a little bit lower, let's go to 195 because that gets us into a big fat profit trap in a couple of days. If we're down to 195, 194, 193, 192, that is a up to $500 profit trap on top of my 210 credit. So there is an opportunity for us to maybe make more than $210 on this trade. But again, this expires in 2 days. So likely the result is going to be this thing closes and officially settles at $2.10, which is what I wanted. But if we drop a little bit lower, and we get down to like, 196, 195, 194. Coming into tomorrow and Friday, this might actually offer us up a bonus credit. Okay. Aurora, if you see the trade, I have one put on the 310 that I'm buying, and I have two puts on the 300 that I'm selling. So what that trade is, you want to know what a ratio spread is? Here's what it is. And again, this we'll talk about in Project Options Edge on Monday when I go through a little deep dive and talk about the trade. So we're doing a put ratio spread on John Deere. We're going out to January, and I did the 310. So 310 by 300. And this is what the ratio spread looks like. Okay, so I pulled in $300, which is going to be basically this in green. So $300. So this is my profit. Okay, so I have 305. I know that's super tiny. Let's see if I can make that bigger. Let's go here. 305 credit. So if price stays where it is, there is no upside risk on this trade. It is an income trade of $305. So I am buying. Take a look at the trade makeup here. I'm buying the 310 with one contract. I'm selling the 300 with two contracts. What that provides me is it just provides me a little bit of a buffer going into my potential assignment. I am personally okay owning John Deere at $300. That is what I'm expressing in the market, right? One of Warren Buffett's favorite trades is the cash secured put. Put it in where you want to own it. If you never get assigned, you just pull income. If you get assigned, you own the shares, and you want to own the shares because it's a good, fundamentally strong company, right? So 310 by 300, it's a 1 by 2. So what that 310 by 300 is, let's do the math on that. 310 buy put and a 300 sell put, what would that trade be? If I just did that with one contract each, what would that trade be? I'm buying the 310 put and I sell the 300 put. What's that trade? That's a bear put debit spread, right? That's a bear put debit spread. You want to see what that trade actually costs us? I'll show you. So DE trade. If I buy the 310 and I sell the 300, okay, that is a debit spread that right now says, well, I can make $1,000, but the broker says it's going to cost me like $300, which honestly, there's no way it's going to cost that much money. I think that what I'm dealing with here is, there's a pretty low open interest. So, I mean, I think that's why the fill was kind of wonky this morning. It was 320 and I got filled at 305. I still have a pending order for a couple of other ones. I would say this in the trade, don't take less than $3. Okay, I'm going to edit this. Note, do not accept less than $3 credit. So if you're not getting filled at 305, don't take less than $3. Catherine. Catherine's been with me for a long time in Equities on Demand back in the day. Yep, that was a Linda fill, 305. No, I mean, I got filled on, I think on my margin accounts, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I've got 13 margin accounts here, and I got filled on 1, 2, 3, 4, 5, 6. So, I mean, I'm just going to let the other ones sit. But look at what they're showing. They're showing a 24-cent debit. Don't make an adjustment. Don't take less than $3. If you want to go to $3, put in $3 credit, let it be pending. Okay? Don't take less than $3 credit. The trade's still good. All right. What I was going to get at here is the 310 by 300. If this is just one contract each, so this was a buy, that'd be a +1. And this is a sell, that's a -1, right? If that's all I did, then that would be a debit spread, okay? But it's so far out of the money, that would be very, very cheap. Realistically, this is probably a debit spread that costs $1 to make $10. So in addition to that debit spread, I'm adding another 300 sell put. So what is this trade? It's a naked put. So a ratio spread is a combination of a debit spread and a naked put. So that's why I could still take the assignment. If price is below 300, I would take the assignment. Do I have to take the assignment? No, I can manage the credit side of this trade and close out for, 1170 or, $15 or whatever and take like $1,000 loss. That's a lot better than owning and trying to repair it and tying up, maybe $28,000 in cash. But the odds of assignment are like less than 5%. The probability of the trade is 97%. That's why I'm putting the trade on. Okay. Sean says, how long do you have to hold this? Well, if my credit is 305, credit's 305, okay, I want to collect probably a minimum of $250 on this trade. So if this is trading for less than 50 cents, then I'll close it out and I'll be more capital efficient just to get out of the trade. But if it's, 305 credit and it's showing, 250 debit, 220 debit, 205 debit, I'm going to hang on to it longer. But here's how this trade gets really easy and really profitable fast. If John Deere, which is trading at, $507 goes up to $650, this 305 credit is probably going to trade for like less than 50 cents fast. So over the next, 11 months, 12 months, if this thing rips up to $700, it's going to be so far out of the money. The probability is like 99.5%. We should probably be able to close this thing out for a quick win. But it might take maybe 3 to 6 months to do that. David says, do you know if there is a preset trade structure in Thinkorswim Web for ratio spread? I don't know if there is, but if you're in the Thinkorswim Web, I'll show you how easy it is to build the trade out. Web especially is very simple, right? I'll show you. Okay, let me make sure one thing today. Okay, give me 1 second here. Okay. All right. I was going to go Thinkorswim John Deere. I'll show you here. So DE, go into your option chain, find that January 15th, 2027, and just add the strikes in here. So I'll go find my 300 strikes. So here's my 310. So I buy the 310, sell the 300, and I just change the contracts. So I buy 1, sell 2, and this should be showing a credit. So minus 305. That's what I'm trying to get filled at. So minus in Thinkorswim is going to be showing me a credit. So if I go review, that should be 306.99 debit. That shouldn't be their case. Hang on a second. 305, 310, 300. So buy 1, sell 2. If I put 305 in here. Okay, so I guess it's positive for credit, negative for debit. That makes sense, obviously. And there would be my fill. Okay, now look at this. If you have a cash account or like an IRA account, the buying power is pretty expensive. Margin accounts, it's way cheaper. Okay, so it takes down. I mean, it's taken some pretty serious buying power, which I'm okay with. But if you don't have that capital, then don't take the trade. There's plenty of other trades we can take. All right. Okay. But yeah, just change them here. I don't think there are default strategies in the Thinkorswim web. I think your strategy choices are in the desktop platform. But that's why, like, when I first started trading options and I started teaching options, I just try to get as many traders as possible accustomed to build the trade yourself, right? Build it yourself. Because once you're comfortable, like clicking on the ask price to buy, clicking on the bid price to sell, finding the mid price if you're doing a spread trade, once you build these yourself, it's just understanding what a trade is. This is a combination of a debit spread with a naked put. A butterfly spread is a combination of a debit spread and a credit spread with the same overlapping sell strike. That's why they come to this profit trap point, right? So every option strategy that you see, every strategy here is just some combination of calls and puts. And ultimately, where does that give us risk and where does that give us reward? Okay. All right. Good stuff. Okay. I do have to be time sensitive here. Blake, I do have a live session at 11 o'clock. Lance and I are going live. So I'm just going to keep pounding out here another like 20 minutes of education. Let's get through some stuff. We don't have a fill yet for Daily Profit Play, but I think the big nothing burger for the Supreme Court today, it is what it is. Markets are just leaking a little bit lower, which is fine. I'm hoping that we can hold. This was where the week started. If you see my crosshairs, this is where the week started. Okay, we are leaking a little bit lower. Let's see if we can get a bounce off of this, support structure. Now, also in my engineered options, I've taken all these levels into consideration. Okay. So if we are going to go lower and fill this gap, we will have a defense trade down here. And I'm okay with that. So my goal is, even if the week is not positive, I'm still trying to win the week, or at the very least, not lose money. So I'm playing defense on the income grid. I'm playing defense on my engineered options. But hopefully what makes this really easy is we just get back and try to finish the week positive. If we are here or higher, then we win full credit. If we are lower, we're trying to manage our way through. All right. But now that we have trades that are in, the line in the sand is in. I mean, we don't have to do anything. We don't have to micromanage this thing. We don't have to worry about the trade. We will spot check this on Friday and see where things are at. Okay. But the trades are out till Tuesday next week. All right. I do have some time here. I want to go through a couple more trades. Progressive insurance is everybody hates it, but it is a really good stock. I would say even like the 150 down to like the 110. Let me see if I can get any credit for this one. So PGR. So this is Progressive Insurance. You might love or hate Flo because she's been the spokesperson for a while. But I'm going to see if I can get something good lined up for January. 150 is not terrible, right? If we came down to 150, I mean, that would be off of all-time highs. We'd have insurance companies down 48%. That's a huge drop. I'd probably get a lot more premium for that 150 strike than I would the 110, but let's see. If I go look at the 110, you see how it's offering like next to nothing on the credit side. I'm probably better off doing like the 150 by 140. 150 by 140. I mean, I kind of love this trade. That's getting $200. That's getting $300. 75%. Really? 75% chance of profit. I thought it'd be way higher than that. I mean, that's a 10 delta. The stock's already down 30%. What's the IV rank on this thing? 29. Let's see what PGR is for the fundamental side. PGR. Snowflake looks pretty darn good if you ask me. Quite a bit below fair value. 11 times earnings, fair value it's a good trade. All right. Now the question is, what type of premium do we want? So 150 by 140. I wish the probability of profit was a little bit higher. but unfortunately, it's reading at 75% right now, and that's probably just because we have a higher IV than normal. But that's okay. So market makers looking at like a plus or minus 46. We're trading at 206. Even if we went $46, that gets us down to this 160 handle. That's still, I'm still out of the money on the trade. So if I can pull in, $3 on this trade, like I think it's a good trade. So I'll do PGR for the remainder of the year. Let's see here. I know, and this is long-term stuff. Like this is like investing. This to me is like portfolio management when it comes to Project Options Edge. So I like the income trade. If I was owning shares, my ownership would be 130. Hopefully I can get this filled for over $3. Let me see. I'll try 335. I might have to finagle it like I did the other trade for DE, but let's see what this fills. So 335 not filling. 330. 325. Fill at 325. Trades in. Okay, PGR. I'm doing the 150 by 140. So that long position, 150 by 140. So 130 minus 3 and change. So like 127 is going to be my break even. And there's no risk to the upside. And if I took assignment on this thing, I would just try to repair it for $500,000. So this is PGR, January 2027 expiration. Buy the 150 put, and then sell the 140 put with 2 contracts, 320 credit. Is that what filled? 325. Okay. Adding this in to trade number 88, PGR. Buy the 150 put, sell the 140 put, 325 credit. Okay, I like that trade on Project Options Edge. Let me find it. New trade. Nice. Catherine says $3 filled on DE. Okay, good. As rates come down, they make less. Not really. Not necessarily. You want to know why insurance has gone up? Because they say that labor is more expensive, parts more expensive, supply chain friction, all that stuff. Like since COVID, they're like, we're going to jack up everything. I mean, when's the last time you took your car to the dealership to get service? When's the last time you had to get a DIY something done around the house? Whether it's DIY or repair. I mean, how about wildfire insurance? How about flood insurance? How about hurricane insurance? You think that's gotten cheaper? Fuck, like no way. It's maddening to see how much of a ripoff insurance is. But if something were to happen, as always, like you're glad you have it. But it's frustrating. So I mean, car insurance has gone up 50 to 100%. I had a $90 a month policy in Michigan, and it's $180 out here in Utah. I drive 1 day a week. How's that possible? How's that math? Yeah, mechanics are getting 50 to 100 bucks an hour. So, I mean, I've taken my car to get serviced, and it's cost me thousands of dollars. I mean, just doing a multi-point inspection is $250 just to get it looked at. Hey, my check engine light came on. $250 to have them take a look at it. And they plug it into a computer to tell you what's wrong. 250 bucks. Anyway, all right, Craig, check your contracts. Remember, it's a buy one, sell two. Okay, it's a buy one, sell two. It should be offering a credit. It should be offering a credit. All right, I'm going to try to get this filled for my other margin accounts. Trade's been posted in the tracker. I'm going to go new trade here, number 88. Trade 88, PGR, 115.27 expiration, buying the 150 put, sell the 140 put for 325 credit. If PGR is greater than 150, keep 325 credit. If PGR is between 150 and 140, that is a profit trap. If PGR is less than 140, I'm willing to own shares. Break-even price would be 140 minus 10 minus 325. It'd be 126.75. And I'll repair with covered calls for $500 to $1,000 income. Okay, and then I'll save a link of this as well. So copy, link, there. Okay, so it's in Telegram for Project Options Edge. All right. And again, look, what's interesting today is everyone that's watching, you're getting a little taste of all the stuff that I do. There's a reason I run all these services. I'm always looking for trades, right? We have a daily routine. We have a weekly routine. We have a weekly routine, right? We have a discretionary routine. We have earnings plays. I didn't want to play financials because they're not very volatile. But when we get into Mag 7, some of the tech plays, we'll get into newsbreakers. Double ups. If I find some good flows, we'll have some, 0 to 1 day, 0 to 1 DTE for the week. Pinch point, we have a lot of pending orders already that are out to like March, April, May. We just had one close today for winter. Okay. So this is a very active morning session that is free for everybody. Daily profit plan is a free session. You can show up. You can learn. If you like one of the services, you want to learn more, then you can trade it with me. Okay. That's why I wanted this type of session. It's like, I know that my job in the day is to trade. So there's a lot of ways I can do it, but hopefully one of these types of styles and strategies will resonate with you and off we go. But that's what I use this session for, is I can touch on everything. Cool. All right, good. So, on that note, like I love the feedback. It's like, I get there's a lot of moving parts. And if you want to just come in, it's like, Chris, just focus on one, it's not going to happen. I have too many things going where it's like, I can manage this stuff, but you don't have to overcomplicate it. I'm not asking anybody to trade 10 different strategies. I'm asking you to be very good at one of them. 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 Know the tools, resources, know the strategy inside and out, and you can be a very dangerous trader in a good way, right? So once you're ready for, more, and you're ready to take on, okay, well, this one trades multiple stocks, this one trade indexes only, this one has different timelines and durations. Yeah, you can sprinkle those in. Okay. But at the end of the day, it's just a trade, and it's just risk, and it's just reward. My goal is to win. However we get the job done, that's how we do it. Okay. All right. Let me get this trade in for PGR. See if I can get this filled from other margin accounts. And I'm going to try. I've got to be live here at the top of the hour, so I'm going to try for one more position. So I'm going to try for JPM. I'll look at WFC, BAC, and JPM. I did John Deere, so that one's already in. And then PGR, I'm doing that one right now. So see if I can get those filled. This account here. All right, I'm having no problem getting filled at 325. So that's the trade. 325 credit seems to be good. Of course, I say that, and now I can't get filled at 325. 324. I'll put it at 320. See if that's an easier fill. All right, I'm going to let it pend at 320. Let's see. That one is... This one's not bad. So that's an IRA account, though. I don't want to take up a ton of that IRA capital. Let me see what that buying power is. So 7634. This is an IRA account. It's taking up 13.6. I still like the trade. I'm going to take it for that account. That particular client likes to be a little bit more aggressive, so that's a good 320 fill. I mean, what the hell, dude? 320 fill. Come on. 1608. We're good on that one. Okay, so I'm putting these in at 320. I've been filled at 325, getting filled at 320 as well. Okay. A couple more. Now I'm getting filled at 320. Okay. They're getting filled at 320. No problem. This is good. Okay. That one is working order. Oh, shoot. Hang on. Okay. 3521 pending. Okay. So 320 getting filled. No decision on tariffs postponed. Thanks, Kirk. All right. So these are all in. 320 getting filled. 325 is getting filled. I'll put in here for the chat here 320 to 325 credit. Okay. So that trade is in. All right. I think we can get one more. Let me take a look at JP Morgan. JP Morgan is definitely way more expensive, but it's way cheaper than, certainly way cheaper than Goldman Sachs as an investment bank. This would be 2025 Liberation Day. That's $200. Let's see what the premium is on JP Morgan. It might not be great. I might not take this trade, but let's price it in. If I went January 2027, the 200 strike. So that low, let me find exactly what that low is. Liberation Day lows is around 202. So that's a 202. So if I did a 210 by 200, another 300 and some bucks. I'm going to take the trade on JPM. I mean, these are looking good. If I can get over 300 bucks on the trade, I'm going to take it. Okay. Let's go for 320. This one's a little bit more liquid, which is encouraging. $315. All right, as long as it's over $3. If it's not $3 or greater, I'm not going to take the trade. 310, not filling, you dirty dog. 305. Come on. Let me net $300 with a 303 or 302. You scallywag. 301. Not filling at $3. All right. Canceling that for right now. JPM, we'll come back to that one. And then Wells Fargo, Bank of America. Let's take a look fundamentally and see which one looks stronger. So BAC. Snowflake was pretty decent. You know, I mean, as a bank, you're probably not going to get a ton premium. It's not going to be like a big juicy premium, but 14 times earnings on BAC, fair value at 62, and then Wells Fargo. Snowflake is again pretty decent, trading below estimated values. 14 times earnings, similar. About $30 more upside. It's more expensive. XSP again. Okay, are we breaking some lows today? Yeah, we're breaking a little bit lower. That's an ugly day, huh? Market's down 1% from yesterday's close. Okay, we'll have a look. Engineered options, we got a couple levels. We're coming right back into this gap area. So let's see how this settles in. Okay. PGR 320. Okay, good. I'm a bit surprised that going into this monthly expiration that we're not getting better flows to the upside, and we I mean, I really thought we would be able to poke that 7,000, not turn it, 86 and freaking drop 100 points. But obviously, you're staring at the same chart that I am. So we'll see if this level in this gap area offers some support. I mean, the good thing is it's only Wednesday. So getting a, Wednesday kind of bottom or Wednesday, Thursday bottom, we could certainly work our way back up Thursday, Friday, and into Tuesday's trading next week. That's my break even, right? So we'll figure it out. 69, 69, 85, $2. So you're going 15 wide there, Edward? Waited. I don't even know what that trade is, dude. You're going 6,900, 69.85. What are you doing? So are you doing an iron condor out to Tuesday? I'm not sure what that trade is. Because if your bottom is 6,900, you're there. If your top is 69.85, you're here. 6,900. So you're doing a 15 wide bull put spread for $2. Is that what you're doing? So you're risking 13 to make 2. Is that correct? So potentially $13 risk for a +2. You need price to stay above 6,900, right? Is that the trade? I'm just be honest. Tell me what it is. I'm just trying to figure out what you're doing. So if that's the case, all you need price to be is back above 6,900. I'm surprised you're not getting a better fill than that, though, if that's what it is. If it's a bull put spread, I feel like you get more credit for that. I would just be mindful of this potential gap fill around 68.50. So anyway, we'll see. But type it in, man. I didn't want to scare you off. It's like, I'm just trying to figure out what you're doing. So are you doing a 15 wide bull put spread for $2? So you're risking 13 to make 2? Or what's the trade? I mean, you typed it in. Tell me what it is. All right. SPX 120 expiration 69. Unless you're doing a debit spread, you buy the 6,900, sell the 68.95. It's $2 to make 13. Now you got asymmetry. So a credit spread would give you like 6 and change, which is not bad. A debit spread, which might be what you're doing here, 69 by 68.85. That's a buy sell. Nope, that's $6 because we're now in the money. I don't know what's going on, dude. If I don't get a comment from you, I'm just trying to make the best of your trade. So if it's a debit spread, $2 is now worth, $6. That's a great trade. If it's a credit spread, okay. So you typed it in incorrectly. You did it. You see how you said 68.95. You did 5 wide, and then you did the 6,900, 69.85. I got you now. Okay, dude. So you got the 6,900, 68.95. It's a 5 wide credit spread. You got $2. You're risking 3 to make 2. Got it. Now we're on the same page. Cool. Yeah, I like it. All you need to do is get back above 6,900. All good. Okay, cool beans. All right, man. This has been a busy session. I know we've been trading all over the place. We had a winner on pinch point. We had a trade filled on engineered options. I took an SPX trade. I've got one filled for my level 0 participation trade. We'll be watching engineered options. I'm going to go live here with Lance in a few minutes. And we have masterclass tomorrow. So masterclass tomorrow, engineered options, 2 p.m. Eastern time. Okay. So 2 p.m. Eastern time, Thursday. I also will have a bonus. So 2 p.m. Thursday. So we'll have our masterclass. Bonus monthly trades. And a deep dive into the strategy. Okay. That is coming tomorrow. We also had a pinch point OKTA winner that was automatically closed. Project options edge. We have some profits that are closing out this week. We also have So winners with the 116 expiration. And we have new trades. So far, I'm getting new trades on DE, PGR. I'm trying to get one on JPM, but I'm going to look at, I'll look at JPM, BAC, and WFC. A little bit less credit on the bank ones, but still, fair trades. If I can get $100 on Bank of America or $100 on Wells Fargo, I'll still take the trade. And that will be far less capital intensive than the other ones when you're talking, $100 and some stock. Cool. Okay. All right, everybody. I'll wrap it up here for today's daily profit plan. I know it's busy. Daily profit play, even though we are dropping, how did we not get filled? I mean, we're at 68.97. We still have it's trading at 50 cents. Crikey. I'll let it sit. If I make a modification, I'll update Telegram. I'm just going to let that hang out. That is annoying. We'll keep an eye on it for the day. Okay. Nice, Randy. 69.80, 68.60, a buck, and out at 30 cents. How wide? How wide did you go? Did you go 10 wide? Had to go 10 wide to get filled, right? For a buck? 5 wide. Good for you, man. Randy, you should run this class. All right. Ernesto says book 90 cents and a 10 wide. Excellent. Cool. All right. I'll let you go. Come back and see me again tomorrow. Looking forward to seeing everybody tomorrow in this session and in engineered options. And we'll talk soon. All right. Bye.